Good morning, everyone. It is Wednesday, January 5th, and this is Morning Market Movers, where we do some live analysis for day trading. My name is Todd Rich. I'm with Nadex. With me, Brian Caprice from Keep Trading Simple. We do have some things to talk about today. It is an interesting day in the markets, the new year. Here we come out, guns blazing. First of all, ADP, ADP employment numbers just came
You,
out.
you've even been practicing and you still messed it
I
up.
I still I cannot say that. I don't know why. ADP. You know
We've
what?
been
I
working on
actually
that, Todd, for 15 minutes and you still messed it up.
so I'll drop a link in there where you can take a look. Now, what happened is the number was double expectations. We'll take a peek over there at that number, but we were expecting to see an add of 400,000 non-farm jobs. And this is according to ADP. The number came in at 800,000, completely blew it out. Now, what did we see? We saw an immediate reaction in gold. Gold popped on that news. We're seeing the Aussie dollar, which tracks gold a bit, also rallying with that news. We're going to take a look today. We've got oil inventories today, later this morning. So we're going to take a look at oil because oil's also tracking higher. And and then we've got FOMC going to be releasing their minutes later this afternoon, and we'll take a peek at how that could be impacting U.S. equities. So we got a lot to talk about, a lot of things moving here this morning. But before Brian and I jump over to it, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone. Any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. Now, we mentioned the ADP numbers. We're going to take a look at that, but what we also saw this Friday, we've got the official non-farm payroll numbers that are coming out. And what's interesting was initially the expectations and the forecast was for that number to come in around 400,000. They've already upped that to 426,000. So we saw a move in Nadex in our prediction markets. The 400,000 was around 50%. You can see now that's 60% because expectations just changed. The numbers should come in, or at least people are expecting it to come in higher based on what just happened with ADP. And then just a quick peek at what we're looking at today with gold. We are going to take a peek over here at gold. I mean, you could see that it just spiked higher. Brian's going to go through all that. And then crude oil. And we are going to go through these oil inventories. And in fact, you can see crude oil tracking higher. In fact, if I grab this channel that I did yesterday, I think you're actually seeing an extension of that. There we go. A bit, and you can see oil just kind of tracking higher. And we do have those oil inventory reports at 10:30 a.m. Eastern, and then FOMC again at 2 Eastern. We're going to catch those minutes. So let's get into it. Brian, let's start off with the employment change numbers from
Mhm.
ADP, as
Yep.
well as how that's hitting gold and maybe the Aussie dollar because we're seeing that.
Yeah. So I would say it's definitely another night of kind of mixed news. Mixed news is the economic news obviously was absolutely amazing. The ADP employment number, I mean, again, forecasted 400 coming in at 807. That, I mean, obviously it's not that accurate. If you go back, you can see that they missed. They typically are big misses or typically misses in general where they said it's a substantial amount. But this is quite a huge change. And again, we've already seen the non-farm number on Friday change as well. Again, the biggest issue that we've seen thus far has been really we don't want to raise interest rates because the labor market is thin. We're concerned about the labor market. We're concerned about the labor market. So it's kind of going back to everything that we're being told is a big problem is turning out that it's not actually a big problem. And it kind of makes you want to look kind of at the undertones of things. Remember, inflation wasn't an issue. And now, again, now inflation is a huge deal, but it's the labor market we can't. Well, they're hiring people back in droves. We saw yesterday the news was 5 million people left their jobs in October. Well, guess what? They're all getting new jobs over here because we've seen another 807 addition. And this isn't even the full number. So we'll get some
Right.
more data on that as well. And then again, we mentioned the CAD building permits that, it's not the biggest mover, but, anytime you're looking for permits to create new things, that's also kind of a sign of where where the economy is going. They
Strength,
tripled
yeah.
that number, almost, it tripled the number. I mean, and they revised it up last, up time, or the previous one. So those are great. So FOMC today should be interesting. They're going to take all these things into play. Um, Remember yesterday, Kashkari mentioned, raising interest rates twice this year. Previously, it was 2024. That seems to be the name of the game. And looking at the currency front overnight, there's been a little bit of movement. We're seeing the yen kind of retrace back again, like we mentioned yesterday. You've seen the dollar yen is down, pound yen is down a little bit as well. Euro pound is again retracing. There was some news, and again, we know that Turkey. Yesterday, we talked about Turkey making all that money overnight. Well, they lost a bunch of it again last night. And again, it's not so much that they have a volatile, situation over there, but as a trader, this is the kind of things I'm looking for. Obviously, Turkey has some problems. They're at a 19-year high. We're at a 39-year high, right? Their inflation right now is 36%. That's crazy, and that's the highest it's been during the current presidency. And it says economists warn that it could still go up thanks to his unorthodox policy of cutting and refusing to raise
To
interest
raise.
rates, a
Yep.
standard tool used by monetary policymakers to cool down rising costs and stress of local currencies. The ECB made comments a little while ago. The ECB is now ready to raise rates and cut stimulus if necessary. And again, we already know that the UK has raised, New Zealand has raised. We're talking about raising. So this
Yeah, and
is
we're
what I
going to get
mentioned
a
that,
glimpse of that today.
yeah, right. This number is so big. We've had comments yesterday, probably foreshadowing a little bit. They have to acknowledge it. They have to, because this is the one thing that was holding them back. Yellen was very, very big on now that employment, the jobs market. We can't do it. Well, there's absolutely no justification, no reason why they can't now. So, you
Right.
know, I think this morning will be a very positive kind of, again. This is a great sign, you know. But the problem is, if you guys remember us talking about this, sometimes the news is too good. I have a feeling that, again, things right now, if you look at the indices overall, they're all a little bit in the red, just a little bit. I mean, none of them are really, crazily spiking. A number this good on any other given day, you would say that's awesome. Twice as many people got jobs. But guess what? This was kind of the dam, right? That was holding back the floodgates of interest rate rises. We know when they start rising interest rates, it's typically red for the overall economy. So, or for the market. VIX right now is up 1%, leading us to that red. But you can see there's not really a lot. I'm expecting the VIX to stay a little bit more inflated because of that FOMC today. So the way that you're going to play this, guys, today is going to be dropping those low time frames, really kind of cutting it back. And again, every single one of these, drop it down to 15. You can see really twice as many people got hired as they thought. No reaction. So look for minor setups, and after I'd say about the 11 o'clock time frame, look to see where the price is setting up today for FOMC. Now, in trading it today, obviously there's going to be increased volatility. You need to make sure that you're picking the right Nadex package. Again, with the three different options out there, we have to see where price is to figure out how to play it. Most likely, the short durations are going to be the way to do it, because there is the potential for a very big spike today, but there will be increased premium there. So you need to make sure that you're finding the right strike. The way that you're going to do that is kind of get in there, look at the ATR, see what the movement is, what movement has already occurred for the day, and figure out what is potentially left. But FOMC, if they say, yes, we plan on raising twice this year, or our first raise is going to happen in June or April or May, whatever it is, there will be a market reaction to it. And again, if it is a very dovish tone saying, yeah, we'll probably raise it 2 times this year, we're going to see what market conditions, because remember,
Right.
Omicron, we don't know what's going on, right? A very
Those
dovish
things might just
statement,
take off.
these things will take off, all of them.
Yeah.
Because again, if they're going to show that kind of weakness again, and well, we all know what's going to happen. So the market has already priced it in, but they've been very reluctant to be the force that's going to crash the overall market. So,
And
and
I'm
again,
not even, and they say crash. I'm not even sure a crash is what'll happen. I think, yeah, you can see some weakness in the market, but there's still the outlook for corporations. I mean, they're still making truckloads of money. Remember, it's like the economy and stock prices, even though we talk about them as though they're the same thing, they're two different things.
mhm,
So
yeah. Yeah, I mean, and in reality, it's not the big companies that it will affect the most. Again, making borrowing more expensive doesn't hurt GM and Tesla. It hurts the little guys, the smaller,
yeah.
the small businesses out there. So again, that's where we'll see it in the Russell the most. I think the Russell will
Or
be the
I
the
just want to
biggest.
put it out there. How much cash is Apple sitting on? I mean, how much
Yeah,
does
but Apple
Apple?
always does that. Yeah, Apple's notorious for doing that. Basically, Apple and pharma are the big cash companies. All pharma has tons and tons of liquid capital. They always have. It's always been something they're known for. But Apple's always been the same way that they keep it out there. And again, Apple and Tesla both had red days yesterday. Really, I mean, again, if you look 2 days back, they both had huge gaps, huge spikes. That's what was really hurting the NQ yesterday. But now we're starting to kind of come back down again. Cooler heads is there. People have acquired the positions. Now more people are working again. Again, I think if Apple and Tesla can both roll positive, and they're trying, right? They're trying really hard to start pushing up from where we closed yesterday. When they both go back into the green again, that should help drag the NQ up. It's currently the weakest, but a
Yeah.
lot of that is from kind of where we were in the overnight. Remember, technology is great. More people working, more technology. It should overall help both these companies out. So
All right.
again,
So
I think there's plenty of news for positive, movement today. At the open, you got to see what that initial pullback looks like. But at the same time, watch it, because on the other end, it could be a great morning and then a really, really crappy afternoon, or vice versa. They may stay negative because, like, oh my God, this is just way too good. And then FOMC could say, yeah, we'll probably do it. But again, it's going to depend on, what's going on. I mean, Omicron is still the unknown factor. All the data is that we don't, know anything about it. But then again, today we're joking that, Chicago, there is now supposed to be a strike today for teachers that they want to go. They're going to go full virtual. The teachers union is not showing up in Chicago today, and the
nope.
kids are being forced to do it. So, when you have when you have kind of news releases out there like that, I think again it still brings some uncertainty back out there in the market. That's a story to watch, and kind of we'll see how it plays out. And again, if it's successful there, doesn't mean it won't be successful other places. Imagine if there's a nationwide teacher walkout and teachers refuse to work. Um, that will be an absolutely huge, huge detriment to the market, because if your kid's not at school, someone's got to watch them.
someone's got to be watching them, and which
Yeah.
means you
So
won't be as productive. So yeah, it's
yeah.
it's so let's do this though. We've talked. Let's take a look at this gold chart.
Yep. Yeah. Gold
And
is
then let's take a
exploding.
look at the oil chart too for the oil
Yeah,
inventory
because we
today.
have news later today. Yeah, yeah. So, whoops, that's natural gas. Oil is exploding. Now it is at a level right now, the 73, the 77.93 level. And yesterday I said, one of the biggest things we needed to watch out for was that API report. Fully expected it to be negative. Guess what? It was negative. Not quite twice, but it's really close. Right? And again, why did I expect this to be negative? All the cancellations of the holidays. If you were supposed to be flying somewhere and now you were stuck at home, you're doing a lot more driving than you were prepared to drive. They adjusted the forecast, but they really couldn't keep up with the actual kind of data with it. So again, huge push down. The market knows that this is there, and this is the industry, right? Obviously the industry number, they like to kind of, they probably pad it a little bit. They're probably a bit more honest than OPEC, but at the end of the day, it's not the actual official report. That's what we're going to get at 10:30 this morning. But thus far, you can see that the Europeans have done really nothing but drive it straight up. The European market started low, and remember, a lot of times we have these, kind of counterbalances, right? But right now we are, this is what we're doing. We're driving up. It right now, oil is currently reacting to this jobs. If twice as many people are working, yeah, there's obviously telecommuters in there, but that's twice as many people potentially that are driving,
Drive it, yeah, get in the
showing
car.
you that demand is returning back to the market. And OPEC sitting over there going, ha, 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 we knew it, at the same time. So we are in an area. We do know that the 77.93 is a big level. Remember, with the price moving this much in the European session, again, a lot of this is coming from that API in preparation for it. If price continues to rally up until that 10:30 time frame, right? It is probably more set up for short than it is long. And the reason why is because the market has already priced it in. When you see this great figure and you're like, oh my God, it's hugely negative, and the next thing you know, it goes straight down. You're like, what the heck is happening here? It's because the Europeans have already kind of played it up to a high price and are looking to sell it in preparation for people trying to trade the actual news market. So, kind of setting up in an interesting way. We'll see.
It's
Again, like I said, a
By the
lot of
way,
times we have the V shape.
there's a
But
rumor, there's a saying in the industry that traders will often use is buy the rumor, sell the news.
mhm,
So right now maybe rumor is not the right word, but they're buying it, preparing for the
yeah,
news so they can sell into it. So when the retail traders actually get the news, they can take their profits, and the
they can take
retail
their
traders
profits.
get to be the ones
Absolutely.
holding the bag.
Yep,
Um,
100%. Yep, yep, and it happens
so
in all of them. That's just how markets work, guys. It's not just an oil thing. It's not just it happens in all of them. And remember, yesterday we are red commodities day. Today it is a green commodities day. Oil's up 1% already. We haven't even had anything. Natural gas up, and again, I expected natural gas to be up today. I got my hoodie on today. I'm literally I have a date with a shovel as soon as we are done. Actually, I got to get my kids to school. They were delayed again because of snow. All the trees are still folded over sideways. So again, East Coast is still under a freeze. I think 850,000 people were without power yesterday. It's all coming back on today, and people are like, "Man, I'm cranking the heat today." And then gold and silver both up because of the news. So this is how it fluctuates back and forth. Oil overall is in a good spot with where we're at. And again, it's not like it's being driven by the dollar. The dollar is currently down right now, pushing. You may say, well, wait a second, why is the dollar down? This means they're raising interest rates. You're right. But what they need to do is, if you want to buy something, do you want it on sale or do you want it when it's expensive? They're pushing oil down right now in this early morning session. So that way, when FOMC happens, there's a potential for the big pop, which again also affects a lot of the different indices out there. Aussie dollar is one of them. Gold spiking. Aussie's kind of up at a level we mentioned yesterday at our mid-afternoon session yesterday that there was a lot of selling pressure. We've now pushed up into there. The news is kind of in. If this news is so great and they acknowledge that they're raising it twice this year, that strong dollar strength coming in, that drops the Aussie dollar straight back down again. So right now it's riding on the tails of gold. But here's our parabolic spike with gold. We know we're in an upper area. We know we have sellers here. Is gold going to turn and kind of come back down to reality as profit taking comes in, which again sets the dollar off, and even bonds
Yeah,
are going a little bit higher.
and that could create that opportunity. So keep an eye on that Aussie US dollar. So if you're
Yeah.
looking for,
Yep.
we actually got this question yesterday. Hey, where should we be looking going into the Fed minutes? Well, the Aussie US dollar could be one of them where we see volatility.
Mm-hmm.
Just because we're seeing it already impact the gold market, we know that the gold is going to could impact the price of the Australian dollar because it's important to their currency. So this is one place. So um, yeah. Good morning. Yeah, I love our crew here. Everyone chiming in.
Yeah.
Good morning to all. All right. With that, we did cover quite a bit. Any more questions for Nadex, please email us customerservice@nadex.com. Brian is also accessible if you'd like to ask Brian a question. Hit him up at support@keeptradingsimple.com. And just a quick recap. There's a lot going on. ADP employment numbers completely blew them out.
Yep.
Expecting to see 400,000, 800,000 jobs came in. I mean, that's just a big number. It did
Mhm.
cause a move in expectations for Friday's non-farm payroll, official non-farm payroll numbers. I mean, the expectations immediately jumped. Number went from 400,000 to 426. I wonder if that's going to be enough. We are seeing that gold move higher, with that pulling the Aussie dollar higher, but we're waiting to hear what the Fed's going to, what those Fed minutes look like, get a little bit more color commentary on their outlook and what they're talking about in terms of ending the easing uh, and actually raising interest rates. How quickly, how many? Uh, so we're going to get a little bit more color commentary on that. Plus, we've got the oil inventory reports 10:30 Eastern. So be paying attention to that. With that, Brian and I will be back tomorrow morning. Want to wish everyone good luck in the markets. Please email if you got any questions, and we'll catch you tomorrow.